If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. Traders, this is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. Man, this has been a really volatile year for equities. You can see if I put a vertical line on the chart to mark the beginning of this year, which is right here, and everything after that, you can see that we have been having massive candles and a lot of whipsaw action, meaning we have like a roller coaster. We go up and then down, then go up and then down. So definitely a volatile market before than previously, because previously we are just making a nice little uptrend and the candle bars are kind of small. So now we're just in a really different type of state. The market's definitely in a different type of state. We're in a volatile state and the swings are getting large. So let's take a look at the daily chart for the SPY. I do a weekly review for this market to review my previous prediction and have another prediction for this coming week. So my previous prediction was we were going to go back down to retest the lows, and that's pretty much exactly where we went to. And you can see that I did my analysis on the 24th. On the 25th, we opened up. Let me zoom in on the chart. This is the 25th candle right here, which is Monday. We opened up a little bit low. We gapped down lower. We traded lower. However, we came back up to fill in the gap and then even closed near the high of this candle. So that's a bullish bar. Tuesday, you can see that we gapped down. We trended all the way down to the lows and closed on this low. So that was a bearish day. Wednesday was kind of like a indecision day. We just went sideways. And then Thursday, we rallied up and we had a little bit of rejection from that 430 level. And then you can see that Friday was a gap down because this was the close of the candle right here. And then the next day, which is Friday, opened right here at this 423 level. And then we traded down the entire day. So it was a downtrend day. And we closed nearest lows, and that ended the week's price action. So if you see on the weekly chart, you're going to see a red candle bar, because if you sum up these 5 bars, you're going to have a red candle. So definitely bearish. We did continue lower. And I'm seeing a little bit of lower prices before a possible rally. However, we are at a strong support level, which could turn around prices, but I'm not expecting it to. So we had this downtrend in play. That's why I was expecting a retest of the previous low, because we had the first break of the pattern. Normally, when we get the first break of the pattern, we should go back down to retest the previous low, and that's pretty much exactly what we did. I'm looking to stop out the person right here at the 410 level. So we close at the 412. I'm looking for prices to enter the 410 or even the 409, 408 level. To stop out the buyers who have the stop losses here. Also, there's a measure move that's also lower. So let's take a look at that. So this is the measure move target that I have. And these are highly accurate. So if I drag it over, you can see that my target that I have for the SPY is right at the 393 level, and I'm still sticking to it, and definitely looks like prices are headed towards that level. So I'm looking for that 393 level because that's where the measure move target is. That's where these aggressive short sellers are gonna probably get out of their position, and buyers are gonna step back into the market at this level right here. It makes sense because that's where the measure move is. We have a couple gaps that could be filled, and this is a previous breakout level that we have not tested. So we are at a strong support level. However, right at this 410 level, or let me drag this up. I believe right at this, yeah, this is a pretty strong support level where we're at right now, right around this 410, 412 level. So I'll put a horizontal line. It doesn't have to be exact, but I would say right around here we are at a strong support level. But you can see that between the top black line, the top black horizontal line, and the bottom black horizontal line is really not a lot of support. So once price action breaks this level, I think we can quickly fall down to that 393 level. And I think that's what price action wants to do. We are getting super extended from the EMA, so a rubber band effect will take place soon. However, I don't think they want to drag this out just based on how volatile this market is, I think they want to quickly reach these lower price targets, maybe next week or within the next couple of weeks, before seeing a rebound back to the EMA. I don't think they want to rebound right now and then just drop around, maybe even go higher and then come back down. I don't think they want to do that. I'm not expecting that to occur. It could happen. I'm just not expecting it to occur, just based on how volatile this market is. I think they want to quickly reach these lower price targets before reversing and continuing higher. I still think we can continue higher, and I'm waiting for this correction period to end in the market. So that's everything I have for the weekly review on the daily chart. And let's go and wrap this up on the weekly chart. Here we have the weekly chart for the SPY. Not much to say. I'm looking for that 393 target to be reached. You see that we had 4 consecutive weeks of selling or downward pressure. So aggressive sellers are definitely in control of this market. I think they want to drop it down to that 393 level before we start seeing some green bars form. So every week has been red since the beginning of April, and next week might even be red again. So we could see 5, 6, 7 weeks of red or selling pressure. So I'm looking for lower price targets. Nothing has really changed. Major pattern is still up. I'm definitely looking for higher prices. I think the market definitely wants to trap any top pickers in this trend. So I'm looking for higher prices after this correction period ends. Am I expecting lower prices if we don't bounce from this level? Like I said before, it's unlikely as of right now. I don't see it occurring on the chart, but it could happen. Definitely looks like there are some gaps to be filled and some breakout levels to be tested. So, but from here, I'm definitely expecting some type of bounce. I don't think we're gonna just go, just crash really hard or anything like that. I'm looking for that 393, 394 level, and we'll see how big that bounce is, and that will determine if we have bottom in the market or not. So that's everything I have for my weekly analysis for the SPY, and I'll see you guys next week. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.